Hello, everyone. Welcome back. Accurate and objective source for the latest developments on the Iraqi dinar revaluation and Iraq's wider journey of economic transformation. Whether you're a longtime follower or joining us for the first time, we're truly glad to have you with us. If you haven't already, we strongly encourage you to subscribe to the channel and turn on notifications so you don't miss any crucial updates. The information we share here can have a real impact on how you view and manage your financial strategy. This platform exists to provide reliable, research-based insight into the evolving financial landscape of Iraq. Our goal is to give you a grounded understanding of what's happening behind the headlines, the political developments, institutional reforms, and market conditions that collectively shape the future of the Iraqi dinar. In a space often clouded by rumors and unverified claims, we stand firm in our commitment to accuracy, objectivity, and clarity. We do not chase hype. We pursue truth, backed by credible data and informed analysis. Every update we publish is the result of careful investigation. We know how important it is to separate speculation from actionable information, especially in the world of global finance and emerging market investment. Whether you're a serious investor with a diversified portfolio or someone exploring opportunities in the Iraqi market for the first time, this channel is here to support your learning and guide your decisions with confidence. And now we turn to one of the most significant developments in recent memory, a moment that has drawn renewed attention from financial analysts, policy experts, investors, and institutions around the world. The U.S. Treasury has officially confirmed both the date and time for the long-anticipated revaluation of the Iraqi dinar. This announcement, years in the making, marks the beginning of a powerful shift not just for Iraq, but for global financial markets as well. What was once viewed by many as distant speculation is now an officially recognized reality. This isn't simply an administrative adjustment or routine market development. It's a fundamental turning point in Iraq's financial narrative. The announcement has ignited new waves of interest among institutional investors, hedge funds, and sovereign wealth managers. Global financial entities are reevaluating their positions, strategies, and exposure in light of this historic change. For those who have followed Iraq's economic journey over the past decade, this moment carries enormous weight. Discussions around the potential revaluation have persisted for years, often surrounded by skepticism and uncertainty. Political instability, economic mismanagement, internal conflict, and sanctions were seen as major obstacles. Many questioned whether Iraq could achieve the structural reforms necessary to support such a change. Yet, here we are, witnessing confirmation from one of the world's most powerful financial authorities. This validation is not only a symbolic win, it is a practical and transformative breakthrough. The revaluation of the dinar is expected to significantly strengthen Iraq's economic standing on the world stage. For too long, the currency has been viewed as artificially undervalued, not reflective of the country's true economic capacity. With this change, Iraq is now poised to more accurately express its fiscal and monetary strength through its currency. This has immediate and long-term implications. Regional trade may become more dynamic. Foreign direct investment is likely to increase. Confidence in Iraq's economy will grow both internally and externally. This event is the product of long-term reform. Iraq has undergone significant changes in recent years, many of which went unrecognized by the global community. Quietly and steadily, Iraqi institutions have implemented critical structural reforms. These include overhauls in monetary policy, banking modernization, anti-corruption initiatives, financial transparency efforts, and regulatory improvements designed to meet international standards. The Central Bank of Iraq played an instrumental role in stabilizing exchange rates, increasing foreign currency reserves, and building mechanisms to manage inflation and currency volatility. All of this was done with one goal in mind: to create a stable, trustworthy, and investment-friendly economy. Iraq's policymakers knew that a revaluation was not just about shifting numbers on a spreadsheet. It was about building credibility, restoring national dignity, and preparing for global integration. The efforts to modernize Iraq's banking system, implement digital payment infrastructures, and align with institutions like the IMF and World Bank were strategic and deliberate. The involvement of the U.S. Treasury further underscores the scale and importance of this revaluation. This is not a unilateral decision by Iraq, but a move that has been coordinated at the highest levels of international finance. The backing of the U.S. Treasury introduces a level of institutional oversight and global cooperation that is critical for maintaining market stability during such transitions. Historically, currency revaluations require strong coordination to minimize shocks, prevent capital flight, and protect the interests of domestic and foreign investors alike. With support from the IMF and World Bank, Iraq has gained access to technical expertise, capacity-building tools, and financial guidance to help navigate the post-revaluation landscape. This level of international involvement reduces uncertainty and sends a strong signal to the world. Iraq is open for business, and it's playing by globally recognized rules. This revaluation is not only macroeconomic in nature, its effects will be deeply felt at the personal level. For Iraqi citizens, a stronger currency means increased purchasing power. Essentials like food, medicine, fuel, and basic household goods will become more affordable as the cost of imports declines. Inflation, which has long been a burden, could ease significantly. Job creation and wage growth are expected to follow as businesses gain greater access to capital and operate within a more stable financial environment. For local businesses, the new valuation opens doors to foreign markets and partnerships. Procurement becomes easier. Profit margins improve. Confidence in the national economy builds. For foreign companies, especially those in oil, infrastructure, telecom, and agriculture, Iraq becomes a more predictable and attractive location for long-term investment. This isn't just an economic pivot. It's a cultural and psychological moment for Iraq, a symbol of progress and recovery. Years of struggle, doubt, and hardship are now giving way to a renewed national spirit. Iraqi citizens can begin to believe in the resilience and capability of their country's institutions. Diaspora communities may consider returning. Local entrepreneurs may take new risks. This moment has the potential to inspire a renewed sense of ownership in Iraq's future. But with such transformation comes responsibility. Currency revaluations are complex operations that must be managed carefully. If not executed properly, they can lead to market distortions, speculative bubbles, or inflationary surges. That's why Iraq's coordination with international partners is so critical right now. The Central Bank of Iraq is working with the U.S. Treasury, IMF, and World Bank to roll out safeguards, monitor liquidity, regulate capital flow, and educate both the public and business sectors about what this change means. We can expect a phased implementation process that allows for careful testing and adjustment before a full-scale rollout. This level of planning gives Iraq a genuine opportunity to become a model for post-conflict economic recovery. If successful, this transition could inspire other nations with struggling economies, weak currencies, or structural inefficiencies to pursue reform with the same discipline and intent. Iraq's story can become a blueprint, a proof point for how sound policy, international cooperation, and institutional reform can lead to national transformation. The global financial community is watching closely. Analysts are assessing how this move might affect energy markets, regional currency dynamics, and even global capital flows. Iraq's role as a strategically located, resource-rich country makes this moment especially important in the broader context of international trade and finance. As an investor, this is a time for strategic awareness, not hype-driven decisions. While the potential for upside is real, so are the risks. Revaluations are rare and sensitive events that involve multiple moving parts. Patience, preparation, and perspective are essential. Watching the data, understanding the reforms, and being alert to geopolitical factors will make all the difference. The smartest investors right now are not just reacting, they're planning. This change will not yield instant results. It will take time for the effects to ripple through financial systems, government budgets, and household economies. But the direction is clear, and the momentum is building. Iraq is entering a new chapter, one defined by reform, responsibility, and rising potential. At Iraqi Dinar Info, we remain committed to bringing you reliable, timely, and detailed updates as these developments unfold. Our purpose is to empower you with information that leads to better decisions, whether you're trading currencies, investing in Iraqi assets, or simply staying informed about global economics. To our longtime subscribers, your patience and dedication may now be rewarded. To our new viewers, welcome. This is a critical moment to start paying attention. We are witnessing history in motion. Stay tuned. Stay informed. Stay ready. The revaluation of the Iraqi dinar is not merely a currency adjustment.